Hello, everyone, and happy Financially Lit Tuesday. So, welcome back for another episode of, like I said, Financially Lit Tuesday. I am back every Tuesday at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. So, if you are tuning in from the Sipping Wealth YouTube channel, be sure to hit the subscribe button and the notification bell so that you don't miss out on any Financially Lit Tuesdays. And all right, y'all. So it's the huge countdown before tax day. Look, tax day is literally less than a week away. Next Monday, April 18th is literally a few days away, tax day. I know everyone is ready and they filed. And those of you that haven't filed are most likely reaching out to your tax professionals and reaching out to STA, getting on the schedule or filing your extensions. But you definitely want to make sure if you do owe the IRS that you're making some kind of payment, because it is a payment to extend the filing, not to extend the payment. So you still can get those penalties and interest if you do not pay the IRS on that tax bill. All right, y'all. So tonight I'm taking live questions. So I've gotten a lot of DMs with some questions. And I know that a lot of people have like some concerns when it comes to taxes. So I wanted to make sure I took the time out to say, hey, let me go ahead and go live and just sit here and answer any questions that you all might have. If you are tuned in, also make sure that you hit the share button, because we don't want to leave our family and friends out of this awesome information. We want to make sure that they get in on the information as well so that they can wealth up with us. All right, cool. So, like I said, drop your messages in the comment section. I'm going to go over a couple that I've received previous to now. So if you do have questions, make sure that you're dropping them in the comment section. All right. So one of the common questions actually that I also received is, do I have to file a tax return? So of course, this does depend on the different incomes that you receive: interest income, earned income, unearned income, different things like that. So where you fall. Also your filing status, whether or not you're filing to receive a refund or not. So this is all the cases of when you are able to required to file. So for most taxpayers, it's like gross income. So ideally, you want to be over that the $12,550 threshold, which is the standard deduction. So if your gross income, your earned income is under the standard deduction amount, then you're gonna end up having a zero tax bill anyway. So generally, you don't have to file if you don't want to. So for married couples, it's $25,100. For head of household, it's $18,800. So if your gross income, your earned income is not more than that standard deduction, you don't technically have to file. Now you can file if you want to tap into those credits, or you're looking to receive like a refund back. Maybe you pay taxes throughout the year and you want to get a refund, then you want to go ahead and file. And then for older kids, so for kids, you do have like maybe your kids are receiving income, maybe you're paying them through your company, whatever the case may be. But if that child has unearned income of $1,100, and that could be interest income, it could be royalties, different things that like they earned kind of passively that they didn't have to work for, kind of. All right. Earned income is more than that. Like I said, that standard deduction threshold, which is $12,550. So if the earned income is more than that, it doesn't make sense. You don't have to file. You're not required. Now, if it's a business, then things change. So if you do have business income, self-employment income, then the threshold is $400. So if you earned more than $400, then yes, you have a filing requirement. Okay. All right. Like I said, if you have any questions, let me know. Let me know. My other question is, if I save all my receipts, will I get a bigger refund? All right. So, y'all, this is big because people will come to me and say, oh my gosh, I have $50,000 worth of receipts. Why is my refund $500 or $1,000? I'm throwing out numbers here. Right. So, they're like puzzled because their refund is not 50,000 to match their receipts. Like, that's not how it works. It's not like, oh, the more receipts, it's an immediate reflection of the credits. No, receipts are deductions and credits are separately. So what happens is it actually lowers your income. So it is lowering your taxable income. Hello, hello, those on Instagram. So it's actually lowering your taxable income. So say you earned $100,000, you have $60,000 worth of receipts and expenses. It just made your earned income 40,000. So that means your taxable income 40,000. So that means you will pay taxes on that 40,000 that's left over. All right. So that's how the receipts work. So for my self-employed people, it is being applied against your income, not like in some special credit because you saved all your receipts. Now you're expecting to get like a huge hello diamond cut. How's it going? How's it going? Um, so uh, you're not expected to receive a huge credit because you saved 1,000 receipts throughout the year. So it's not a dollar for dollar exchange. It's, hey, we're decreasing your taxable income. Now, after your taxable income is figured, we figure out how much taxes you will owe. And then from that, we're like, all right, do you have any credits? Now, credits get applied dollar for dollar. So if you receive a tax credit, then $500, then it will lower your tax bill by $500. So dollar for dollar. Deductions do not work that way. Okay, I had to make sure I go over this because I get some people that are shocked. All right, they're like, "What? All those receipts I saved? What's going on?" Um, so the IRS does not reimburse you every time you go to Starbucks. That's not what a write-off means. So just because you drove your car around town for business, that doesn't mean like the IRS is just going to hand you a credit for using your car. Like it doesn't work that way. Okay. So, and this can also, those deductions can help when it comes to figuring out your income tax and your self employment tax. So, for those of you that are like small business owners, LLC, disregarded entity, or just like 1099, then you have to pay self employment tax. All right, you have to pay income tax and self employment tax on that year end report. So that decreasing the taxable income can help decrease those two taxes, which helps with getting a refund if you are entitled to one. All right, y'all. Like I said, if you have any questions, make sure y'all drop your questions in. All right. So some type of write-offs that will actually apply, write-offs meaning deductions, not credits, not like the IRS handing you money, handing you a refund on the money you spent. Okay, so different write-offs can be advertising, it could be education, training. So if you have like continuing education that you're doing, then that's fine. If you invest in a course, like you can definitely make sure that that's deducted. Your car and truck expenses, if you're utilizing it for business, you can go ahead and deduct those expenses as well. Um, if you are leasing a vehicle and if you're leasing a vehicle and you're using it for business, then you can actually deduct those lease payments as well. Rent payments, all these are business. Okay, so not like, oh, you rent out your house. Now if you do have an at-home office and you don't have a storefront or brick and mortar, or you're not renting anywhere else as the office space, then you can go ahead and deduct like the office in your home. All right. Just that space. So you got to get the square footage. payment paid to contractors. So this one is big because I get a lot of small business owners. You're paying contractors, but you're not 1099ing them. Hey, real Julian, how's it going? Hey, hey, hey. Hey, Ori. Hey, girl. So if you're not 1099ing them, then you can't take the actual deduction. So if you're paying a business, another incorporated business, then you're fine. But if you're paying someone an actual contractor for labor and you're not giving them issuing them a 1099, then you can't legally take that deduction. All right, so you do want to make sure that you're tracking these payments that you're paying these contractors so that you can issue them a form at the end of the year. All right, a 1099 form. Hello, big back trucker. How's it going? Hello. These Instagram names. Alrighty, y'all. So travel, meals and entertainment. So we're still in the three martini rule year. So with the three martini rule, we have 100% of the meals and entertainment expense able to be deductible. So this is something that a lot of self-employed people can take advantage of. All right, office supplies, um, all that good stuff. So tax receipts to keep, make sure that you're keeping your retirement contributions. Like there are retirement contribution credits, y'all. So this is huge. Like if you did contribute to retirement, you could possibly get into that credit. Hello, hello. um Documents, or like if you had like bad debt, you can also take that. Or maybe you had worthless securities, or maybe you even invested in some stocks and you lost money, when you have realized losses, you can actually take those deductions, and help decrease your tax bill. um Receipts made to house payments made to household employees. I know that's not pretty common, but it does happen. So that's something to also look at as well. Um, Special tax benefits, educator expense deduction. It is $250. So that is something that you can also take advantage as well if you are an educator. If you gift like a property, and gifting a property doesn't have to be you gifting a house. It could be you gifting a car. It could be you gifting, something of value, and that could help as well. Charitable contributions, of course, dependent care expenses. These are all receipts and things like that you want to keep track of. Because I sit in my appointments with my clients, and they're like, we were sitting there, we're trying to rack our brains thinking about what they did last year, what they might have done last year that can possibly help with getting them credits or deductions on their tax return. So you want to keep track of these things throughout the year. All right. Okay. Any questions, y'all? Let me know. Let me know. Alrighty. So my another question I had was, what happens if I don't file my taxes? So like I kind of said at the beginning of the live, like, so maybe you go 5 years and the IRS says nothing. You don't have a letter, because you think about it, you have 30 million people that are paying taxes. The IRS could only keep track of so many, right? So generally, like, you do have alerts from the IRS. So possibly, but you don't want to run the risk of saying, "Oh yeah, I'm not going to file my taxes." And then now you have to pay penalties, interest, and all that stuff, because the IRS can go back years. You can only go back 4 years, but the IRS can go back 7. And then if it's fraudulent, then they can go back indefinitely. So and then you lose out on a refund that you may have had if you would have just filed your taxes when you were supposed to. So go ahead and just file your taxes. Okay, don't don't run away from it, because you want to avoid those penalties, the interest, and that's money you're throwing down the drain when you literally could have just sat on a call with STA for an hour of your day and gotten it filed and out of the way. All right, so this is money that you could literally keep in your pocket by just filing your taxes. And generally, I find that most of my clients that are like scared to file their taxes because they're like, oh, I think I'm gonna owe. 9 out of 10, they end up not even owing because, like, little do they know there are tons of credits going on right now. So there are credits that you can take advantage of, that you could possibly take advantage of, that could even possibly get you a refund back versus you having to owe. And the longer you wait to file your taxes, you may not be able to even get that credit anymore or get that refund anymore. All right, y'all. So, one thing to also keep in mind and do that I recommend is making sure that you pull your transcripts and things from the IRS website. If you have never logged onto the IRS website, go ahead and do that. It's simple process. irs.gov, sign into my account, and you can view. You can pull your transcripts from the last few years, just kind of see what your taxes look like. Um, and then it will also give you an idea of, hey, um, whether or not you have like possible refunds and things like that sitting in there that you may have not even received, or if something was done in error. So I highly recommend just logging onto the IRS website so you can make sure that you can you see your tax records. All right, so the IRS does have like penalty waivers and things like that for certain situations, but you do want to make sure that you get in touch with somebody if you do have those issues. Hey, Darius. Hey, hey, hey. All right, y'all. Any questions? I'm gonna leave the floor open for like 30 seconds or so to see if I have any other questions that pop up. If not, I will go ahead and shut down the live. Let me know if you have any questions. Any questions, any statements, anything that y'all are pressed to know or find out about. Let me know. Mm-mm-mm. Hopefully everyone's Tuesday is going great. Like I said, we have less than a week until tax day. Yay! If you do need an extension, go ahead and get that extension. It doesn't extend you from paying, but it does extend you from having the file by the 18th. All right, y'all. Okay, if I don't have any questions, thank you everyone for tuning in to this episode of Financially Lit Tuesday. If you do have anything that comes up in the future, or if you have any topics that you would like us to go over in the future, go ahead and send me a direct message. Like, hey, Wadleen, could you go over this? Let me know if these lives are beneficial, without any feedback, and then also make sure that you head to the Sipping Wealth YouTube channel so that you can subscribe to the YouTube channel. All right, y'all. Thank you again for tuning in to this episode of Financially Lit Tuesday. I'll see y'all next Tuesday at 6:30 p.m. For another episode. All right.